Okay, let's continue for the section 65 is another condition of the revenue and expense recognition in the calculation of the taxable net profit. For the section 65 is number 3 about the calculation of the value of the asset. Okay, section 65 is number 3. They said that the value of all kind of the asset other than the stock in trade shall be taken and valued at the price which they normally be purchased. Okay, what does this mean? It means that in any kind of the asset that the company would like to take as the asset when they buy for using in the operation for the business of the taxpayer, uh, they should be able to prove for the normal purchasing price. Why? Is this protect to the taxpayer that may access the high value because when they recognize as the asset, it will become as the expense in the car of the depreciation. So to prove that the value of the asset shall be valued at the normal purchasing price, it should have the supporting document to prove for the capitalization of the cost. That will be use the assumption that the cost shall be the purchasing cost plus with the relevant expense that related to making the asset is ready for use. If they are produce the assets by themselves, it will be the manufacturing cost or production cost or the construction cost uh, plus with the another expense that related to the uh, construction of the asset for use. And it's also allow for the borrowing cost. By the way, the cost shall not be the overprice. So this is to protect for the amount that will be subsequently to be the expense. However, this will be applied for the all kind of the asset except the stock, because the stock or inventory, okay, stock in trade or the inventory is as another condition in the section 65 base number 6. Okay, that will be using the conception of the costing method for the valuation, and the tax allow them for the market price which is lower can be used in the valuation. We will continue to discuss about it again in the part of the inventory. The second phrase of this condition is that where the case that the value of the asset are increased by the revaluation, the adjustment of the asset value shall not be included as a taxable profit. Okay, sometimes when the asset is buy for a long time, when the asset is bought for a long time, the asset price, the asset value may be increased. In the accounting method, in the accounting for the financial statement preparation, we have the conception of the valuation to revalue it at the new price at the circumstance of the factor that related to the price of the asset, and will recognize it as a gain or gain on the revaluation into the profit and loss statement. By the way, according to the accounting standard, today we have the accounting standard that follow to the International Financial Reporting Standard IFRS. Some kind of the revaluation shall not may not reflect to the profit and loss statement. It will be reflect to the other comprehensive income. However, that's one you will learn it in part of the accounting. By the way, in the tax, when sometimes of the revaluation is will reflect to the profit and loss statement as a gain from the revaluation that affect to the accounting net profit. But for tax, this phrase show you that if the gain of that include in the accounting net profit, tax will not be recognized. Tax will not recognize that profit as the income in the calculation of taxable net profit. So we have to exclude it out in the calculation. of the taxable net profit to ensure that we can compute the correct one of the corporate tax liability of the accounting period. Okay, this is for the condition of the section 65 bis number 3. In opposite side, if we go to the part of the section 65 third, the devaluation. Okay, some kind of the asset, when the time pass, the asset value may be decreased. So uh, as accounting, we have the process of the devaluation by estimate for the loss. This loss for the revaluation will reflect to the financial statement and affect to the accounting net profit as an expense as the loss. Section 65 also not recognize that loss as expense in the computation of the taxable net profit too. Okay, I will emphasize on this condition again when we're talking about the section 65 third. Okay, next one for the section 65 is number 4. Section 65 is number 4 is about the market price of the revenue recognition. Okay, condition says that where the case of the transferring of the asset, okay, where the transferring of the asset, rendering of the service, or lending of the money. Okay, this case, if they do not charge for the remuneration fee or interest without reasonable ground or reasonable cost, or they may charge for the remuneration fee or interest, but the fee that they charge or the interest that they charge is lower than the market value or market price without reasonable explanation. This condition gives the authorization to the revenue officer to access the income, to access the revenue at the market price at the date of the provision or date of the transferring the asset or lending the money. So it means that if they can prove that they charge or their revenue, their income is recognized on the market price, or if it is lower than the market price but it has the reasonable cost, it has no adjustment required. But if they cannot prove that the revenue that they recognize in the calculation of the accounting net profit is market price, okay, they cannot prove that it is market price or it is lower than the market price without reasonable explanation. In the computation of the taxable net profit, they should reassess the amount of the income in the calculation of the taxable net profit for the accounting period by the taxpayer by themselves, since the process of the tax collection under the corporate income tax in Thailand, we use the self-assessment process. So the taxpayer must access their income or their tax base correctly by themselves. In case they do not access the tax base correctly, this condition under section 65 bis number 4 gives the authorization to the revenue officer. If they investigate and found this point, they will the revenue officer has authorized to access the income at the market price and adjust the tax calculation in subsequent period. So we are in the process of the tax calculation by self-assessment process. So we have to reassess the price at the market price by ourselves, by the taxpayer. Okay. For example, to give you for more clearly understanding, if we example that the taxpayer business are the furniture seller, okay, they have a lot of kind of the furniture sell in the store, okay, but one day maybe the the cousin of the taxpayer of the director come to the store and found that it has a one type of the furniture that they like and they would like to buy it, okay, and the director of the taxpayer sells the furniture cheaper than other customer without reasonable excuse, without reasonable explanation. Okay, for example, you have the company have the table. The table normal selling price is 20,000 baht, but the cousin like it and would like to buy it. The director sell it at 10,000 baht. Okay, normal price is 20,000 baht, but the cousin can buy it at 10,000 baht. You can see that the price is cheaper than the customer normal general customer for 10,000 baht. If the taxpayer cannot prove that why they sell it at 10,000 baht, or the price that they charge at 10,000 baht is market price, okay, they cannot prove. They have to adjust another 10,000 baht include in the calculation of the taxable net profit, because when they sell at the 10,000 baht, revenue will reflect to the profit and loss statement just only 10,000 baht. Okay, let we see in the part of the reflect to the in the profit and loss statement. Okay, for example, if we have the profit and loss statement, customer and for the cousin. Okay, normally if they sell it at 20,000 baht, in the profit and loss statement for the revenue, they will show for 20,000 baht, and it has a cost of the furniture, cost of the table, for example, maybe 5,000 baht. Okay, so this case, they will have the gross margin for 15,000 baht, but they agree to sell to the cousin at 10,000 baht. You can see the cost will affect at 5,000. In this case, gross margin will be 5,000 baht. You can see that the difference of 10,000 baht lower profit, right? Section 65 bits number 4. We have to prove that 10,000 baht is charged lower than the 20,000 baht with the reasonable explanation or not. If we cannot prove 10,000 baht different, this one should be adjusted to make the profit in both cases equal at 15,000. Okay, this is the way for the meaning in the section 65 bits number 4. Okay, next one for the section 65 bits number 5. Asset or liability of the company of the taxpayer if they are quoted in the foreign currency balance and it is remain on hand on the balance sheet date in any accounting period, it shall be adjusted into Thai baht using the average buying rate or average selling rate of the announcement by the bank at the end of the accounting period on the day of the end of the accounting period. What are the asset or liability that value in the foreign currency balance? For example, if the company sells by export, sells from Thailand by export to other country, and they are agree the price that to be settled is in the US dollar. Okay, normally it should be deal with the Thai currency or other currency depend on the business case. But if they are deal in the Thai currency, they will not have the difference of for the currency between Thai and other currency. But if they are agree in other foreign currency such as the US dollar, and this number is not yet settled at the end of the accounting period, in the financial statement in the accounting, it will be shown as the account receivable. So the account receivable is a kind of the asset that is pricing or value in the foreign currency. So at the end of the accounting period or on the balance sheet date. This account receivable in the US balance, okay, in the commercial it is a US dollar balance, it shall be recalculated to be Thai baht using the exchange rate at the end of the accounting period to convert into Thai baht again. So it will have we call it as unrealized gain loss on exchange rate. This unrealized gain loss on exchange rate will be included in the calculation of the taxable net profit. Okay, that are the meaning of the section 65 bis number 5. Okay, next one for the section 65 bis number 6. The stock in trade on hand on the closing date of any accounting period, it shall be valued at the cost or the market price, which one that is lower. Okay, what does it mean? Stock in trade, okay, stock in trade or the inventory. This will be value at the cost. So what is the cost? Cost is comprised on purchasing price or production cost. Okay, this one will be include for any conversion cost plus. Okay, um, under the accounting production cost or conversion cost, we have three major parts that are raw material, labor cost, and overhead. This is a total cost for the production. How much of the unit of the production, how much? It will be divided and it will be the unit cost of the inventory. This will be the cost that should be shown in the financial statement to value the amount of inventory. However, since the inventory may be reflect from the time past, the time change, or maybe customer need change, customer behavior change, sometimes the price that we can sell it is maybe less than the cost. Okay, so if the taxpayer can value the lower market price in the accounting period, it means it has the evidence to prove that the market price of this inventory for this unit is already decreased and it is lower than the cost. Tax will recognize the different one between the cost and the market price as the loss on inventory valuation and recognize this as the expense in the calculation of the taxable net profit. But if in the subsequent period the market price of the inventory is over than the cost, they cannot access that value as because stock should be valued at the cost or the lower market price. Okay, these are the meaning of section 65 bis number 6. Okay, to understand this clearly, I would like you to back to the class of the costing, even for the cost 1 or cost 2. Okay, that's for the section 65 bis number 6. Section 65 bis number 7. The tax officer shall have the power to access the cost price or of the importing good by comparison with the cost price of the good at the same category and type which are delivered to another country. Okay, what does this mean? When we buying the inventory or we import the product from the other country, the tax officer or the taxpayer shall declare the cost or shall declare the price to pay for the import duty to the custom department. Okay, and at that time when they declare for the cost, they have to pay VAT too if that product is liable to the VAT, and the calculation of the VAT will be based on the value of the cost that they declare to the custom department. In this case, normally as a taxpayer, by their understanding, they would like to save the tax. Okay, they would like to save the tax. So if they can show the value of the importing good with the lower one, the reflect to the import duty and the VAT shall be lower too. So with the same category, same SKU of the product, if when the custom department has the evidence that the product with the same category or same SKU, that they have the information that then other tax officer or sorry, other taxpayer import with another price that is not matching with this case, with this declaration, the tax officer or the custom department has the right to access at the price that they have the information, unless the taxpayer has more clarification that why the price that they declare is lower than others, and they have to show the supporting document. In that case, if they can show, the price that they declare will be the base for the calculation of the import duty or the VAT. But if they cannot prove, authorization giving to the tax officer to access the price of the importing product with the same information that they have with another importing transaction. Okay. Next one for the section 65 bit number 8. The cost of the goods in terms of the foreign currency shall be valued into Thai baht at the market rate of the exchange at the date of the acquiring of the goods. Okay, that will be the foreign currency that is available in official rate. Okay, this means that since the collection of the tax in Thai, we use the Thai baht currency. So in every transaction that is in foreign currency transaction, it shall be valued into Thai baht. Okay, so the meaning of this case is that every time that they have the transaction in the foreign currency, it should be converted into Thai baht using the exchange rate that rule in each day. Okay, the exchange rate that rule in each day. For example, they may use the commercial bank or the Bank of Thailand. Okay, they can use this exchange rate that announced by the commercial bank to convert foreign currency transaction into Thai baht and use that as the value of the asset, value of the inventory, or the value of the tax base for the calculation of the import duty or the VAT. Okay, that is the meaning of number 8, or we know in the technical word for the exchange rate as transaction date rate or the spot rate. Okay, that is the meaning of the foreign currency. Next one for the section 65 is number 9, the writing of bad debt expense. Okay, the writing of bad debt expense will not be treated as the expense. It means that under the section 65 is number 9, they do not allow the tax do not allow it as the expense for the write off for the bad debt written off unless the company follow the procedure and condition. The procedure and condition are right down in the ministerial instruction number 186. Okay. Character of the debt that can be written off and taken as the deductible expense in the computation of the taxable net profit. It should be the debt that arose from or in connection with the business. Okay, what is the arose from? What is the in connection with the business? Arose from is maybe is come from the uh, core business. In connection sometimes is will be extra charge that is not core business, as for example the penalty or the surcharge that they charge on amount which the account receivable is not paid, even it is already due for the payment. Okay, that is in connection. Number of the debt that can be written off and taken as expense should be arose from or in connection with the business, and that amount of debt already included in the calculation of the taxable revenue in other accounting period already. Okay, and this one already include as taxable revenue. The second characteristic is that the claim for the debt is not yet barred from the court action. Okay, uh, under the law, sometimes if the debt is not taken as the action within the time that limit by the law or do not have the sufficient evidence for the purpose to sue the case in the court action to sue the debtor. In this, in this, it means that the claim for the debt still not bear. But if they do it after the timing, the deadline, okay, it's doing they do the taking the action with the debt in the collection after the deadline, after the time that limit. It means the right for claiming is already buried. So the time, the right to claim this debt if it already buried, and you have to write off as the expense, this kind of the debt will not be deductible. Okay. Next condition is that number of the debt and the number of the debt and the action that is required are categorized into three levels of debt. The debt level 1 is number of debt which is over 500,000 baht. Level 2 is the debt among 100,000 to 500,000. For the taxpayer who are the financial institution, level 2 will be the debt among 200,000 to 500,000. Level 3 is the debt that is not over 100,000 baht. For the bank or the financial institute will be the debt which is not over 200,000 baht. Okay. Action should be taken according to number of debt that would like to write off for one debtor. Level 1 for the debt which is over 500,000 baht. They have taken the demand for payment. The demand for payment have been made and the matter has been pursued for the extent to suitable to the case. It means they have sell in the credit and they do not get the payment. They have to prove that they have the evidence to follow up the debt. Okay, such as the registered mail, the telephone call, the email, whatever, that they show that they have already followed up for the debt for payment. The second one is that the civil action has been brought in court to against the debtor or the petition has been entered for sharing the proceeds in an action, and the court injunction or order has been issued but the debtor has no property to settle the debt. It means they have to sue the case into the court action, or in case of the bankruptcy action, they have the taxpayer already make the petition for sharing the proceeds from the debtor, and the court already have the final judgment that order the debtor to pay and the debtor still not have the property to pay the debt. Okay, it means the court has already making the final judgment. Or the bankruptcy case, they have put the case into the court action, and the petition for sharing of the bankruptcy action has already filed, and the compromise all have been reached or whatever. All of that have been done, have the final step, and the debtor do not have the asset, do not have the process, do not have the property for the payment to be shared. In this case, if they can follow to this one and can is have proof that the debtor do not have the property for payment, the taxpayer can write off the bad debt as expense. For the level of debt, which is among 100,000 to 500,000 for general company or 200,000 to 500,000 for the financial institution, the first one making the demand for payment, the second one making the court action at the civil court or the bankruptcy court, and both, even for the civil case or the bankruptcy case, the court has the order to accept the case for the petition or for the consideration for the judgment. In this case, at this step, even the court do not yet have the judgment, but they accept the case for the consideration because they can prove that this is not yet barred from the court action. The court accept the case for the consideration. At the accounting period that the court accept for the case, the company or the taxpayer can write off the bad debt expense and take it as a deductible expense in the computation of the taxable net profit. However, the director or managing partner should be authorized for the writing of bad debt within 30 days from the last day of the accounting period. Okay, and for the level 3, just making for the level 3, just making for the demand for payment and do not have the action from the debtor. And another point that is very key important one is that if the taxpayer decide to sue the case, the expense for suing the case may not be covered by the amount of debt. If they can prove like this, okay, it is the debt that is arose from the business, the case do not yet bear from the court action, and the amount of debt is not over 100,000 baht or 200,000 baht for the case of the taxpayer who are the financial institution, and they can prove that they have already made the demand for payment, they have thrown up the debt from the debtor, and they have the evidence to prove that if they sue the case, this amount of debt, although they can get back from the payment of the debtor, but it is not recovered by the cost of the expense for hiring the lawyer for suing the case in the court action. In the period, they can write off the bad debt and take it as the expense in the calculation of the taxable net profit. Okay, that are for the section 65 bits about number 9 about the bad debt written off. Okay, next script we will continue for another condition.